afternoon, folks, and welcome to Wednesday's Market SITREP here at Top Gun Options. Beautiful day down here in Fort Lauderdale. It's Wednesday. That means we have our accelerated retirement live trade brief coming up here at 1 o'clock Eastern. Going to be taking a look at Facebook, going to be taking a look at our existing trade on CME, and then we're going to take a look at what I call a Captain Kirk trade. We're going to be boldly going where nobody's really going right now, and let me give you a little bit of a hint. Its initials are KSA, Kingdom of Saudi Arabia. We're going to be taking a look at that at 1 o'clock as well. Hey, with all this recent market volatility and all the craziness going on, obviously it looks like we're having this snapback, relief rally, whatever you want to call it. We're going to be opening up the doors tomorrow at 1 o'clock. Every Thursday, we do our Analyze Your Trade and a weekly debrief. What we're going to do is open that up to the general public so you can come see what we're doing here at TGO. All you need to do is head to go.topgunoptions.com/brief. And you can join us, like I said, with our regularly scheduled Analyze Your Trade and weekly debrief. We're going to take a look at our weekly options trade for the week, see how that's doing. The other trades that we took a look at, a new iron condor and an existing iron condor on CME. And we're going to be talking about Apple, Facebook, and all the other horrific tech names. We're also going to be, more importantly, talking about China and the trade war and what's going to happen next, in my opinion. So again, it's free to the public. Head to go.topgunoptions.com/brief, and you can join us tomorrow at 1 o'clock. We've been covering Brazil a lot lately. Really happy with what's going on in the EWZ, which is the Brazilian ETF. Really like what Bolsonaro's doing down there. We have a Jan 21 on and geez, nice move today, up 2% out of this. I thought this thing was going to give some of this back and take a rest. It did take a rest. It didn't give any back, and it's heading higher. Wow. Really nice looking moves out of the EWZ, and we got into EWZ right back here, right around the runoff. So let's take a look at how our long EWZ is doing since we got into it. Up, what's it say, 32%. Man, most hedge funds, if they were up 32% in a year, would close and go to the Hamptons for the rest of their lives. This one position's up 32% in, what's that, a little over 3 months. So really good looking trade going on there with the EWZ. Now, this whole China thing, folks. Let's cut to the chase here. U.S. and China make progress in talks on trade. Yay! What did they make progress to? Maybe the people above our pay grade should meet to talk. Why? Because we have a lot of major issues and major hurdles that remain. So as I've predicted, China's going to give the president a little bit of victories here and there to make it look like things are moving the ball down the field and all that type of stuff. But they're not going to do anything, folks. Here's my prediction. Do you think that one of the thorniest items or sticking points is intellectual property theft? Even if China agrees to stop stealing everything that we own, do you think they're going to stop stealing everything that we own? They're not going to do that, folks. So I think it's a lot of kabuki theater. I obviously think the market rallies on at least news of a trade deal when that happens, and it ain't happening anytime soon. I mean, these folks more or less meant to kind of flush out the next round of meetings, which would flush out the next round of meetings. This is a longer process, but anyway, stocks are kind of drifting and wallow around here as we predicted for the week. Why? Because we have the Fed minutes coming up today, but more importantly, we're going to hear from the Fed chief again. I don't think we've seen this much out of a Fed chairman in a long time, ever since Ben Bernanke was gallivanting all over the place, folks. So on Thursday, we're going to hear from Chairman Powell. So today, we're going to see the written word. We're going to get those Fed minutes here this afternoon. And we're going to see really how dovish they really are. I have been of the opinion that he really hasn't changed his tune too much. I mean, he went from being, hey, we're definitely going to do this, to, well, we're going to be more data dependent. Well, the data are fairly, they're kind of Goldilocks right now. We're not at a blistering pace that the economy was on, but we're not imploding. So we're right down the middle, which could be, kind of dovish. But I still think the guy's got to raise interest rates next year. Period. He has to do it. Janet Yellen should have done it. Ben Bernanke should have never done what he did, but that's a longer discussion here. So remember that, and I briefed this yesterday in detail in our primary live trade brief, that backwardation in the VIX, meaning the front futures contracts, the front VIX price is a hell of a lot more expensive than down the road. That's inverted, right? That's called backwardation. So a lot of smart money right now is thinking that there's a lot more volatility ahead. Look at this rally here. Each day, huge, medium, small, small. Does anybody think this just keeps powering higher? No, we're due for a pullback here, guys. And you know what the pullback is going to be, in my opinion? Earnings. Last earnings, previous earnings, right back here in the fall, were what? Awesome. JP Morgan hadn't made that much money since JP Morgan was alive, or had as good of earnings. Target, CEX, you name the industry, everybody was hitting on all cylinders. And what happened? The market went down. This time around, I actually think earnings are going to be a little softer, and a lot more CFOs and CEOs are going to pre-warn and say, hey, this China thing is really taking its toll, or will take its toll with their forward guidance. That's going to be another leg down, in my opinion. I want to be wrong, folks. There are a lot of times at Top Gun Options where I'll actually say, I want to be wrong on this. Because if I'm wrong and earnings are great and nobody mentions the word China trade war and these things just rip higher, I have a lot of Jan 21, I have a lot of longer data positions that are expiring that are going to do great. Awesome. But if I'm not wrong and this thing heads lower, we did a great job yesterday in our primary live trade brief about what? Talking about hedging if and when this market rolls over. I agree with Bill Blaine, man. This relief rally feels desperate and too reliant on the Fed. I really don't think I think it's way too early to call a bottom in the S&P 500. Okay. As I said, one of our new Captain Kirk trades for 2019 is going to be KSA, the Kingdom of Saudi Arabia. Saudi Arabia is raising money again with international bonds. They took a beating over the past couple months. No pun intended, taking a beating with the Khashoggi killing, however you say that guy's name. Where was that? Like right around here. So 15 out of 19 hijackers that killed 3,000 Americans came from Saudi Arabia. Liberals. Oh, wow, that's awful. Kingdom of Saudi Arabia kills one of their own citizens. He was not a U.S. citizen. He wrote a couple op-eds for the Washington Post, which I guess makes you a journalist nowadays, and our journalist. And the world goes apeshit. Liberals want to go to war with Saudi Arabia. That's not going to happen, folks. So the United States, unfortunately, gets into bed with some pretty bad actors. I mean, we're negotiating with North Korea for peace, and the guy has, literally tens of thousands of people in gulags, man. He starved people. They ate grass. And people necessarily didn't go apeshit then. But anyway, KSA, we're going to take a look at investing in that. CME went down the other day, mainly because of there's a bunch of other clown cars that want to launch their own members exchange. That ain't easy, folks. I've tried to build an exchange before at a company I used to work at. I've heard that they might be trying to build their own exchange, and they've been going on 2 years now. So CME had a little bit of a pullback yesterday, and it's looking fine. Apple. So a week ago, he gets on TV and says things are awful, and it's awful. He gets on TV yesterday after seeing his stock implode, and what's he do with Jim Cramer? He could not be more bullish on his stock. It's comical. And then what happened today? Apple slashes iPhone production for the second time in 2 months. So you can be forgiven for being battered around with Apple. We have a bearish double vertical on that ain't looking so hot because So here's Tim Cook on TV last week saying the world's ending with Apple, and then him more or less coming out and saying, well, no, I didn't mean all that. Really? Does that look like a bullshit chart to anybody right there? So Apple, I told you to get out of it a year ago. It's rotten. Zuckerberg's rotten. Did you see the little letter or whatever it was that he sent out yesterday? Zuckerberg distracts from privacy scandals with a pedantic personal challenge. It was comical what this guy wrote. And never forget what this guy said in 1984 when he was starting Facebook. One of his buddies said, hey, man, how did you get all these people to give you their personal information, their sacred data? They trust me, dumb fucks. So his letter yesterday answered nothing about the scandals he's going through. It was just so many big questions about the world. And do we want technology to give more people a voice and gatekeepers? And what an absolute shit show. CNBC reported a cult-like workplace culture at Facebook where people have to walk around with a smile on their face. And if you say anything negative, you're fired. It's just comical. Very, 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 very funny. And an op-ed in the Wall Street Journal earlier this week that said, or last week that said, no, it was this week. What's worse than Facebook? So If you want to get bullish on a stock that has all these type of roaches in the kitchen, you're an idiot, and you deserve to lose all of your money. Amazon would be the place to put that. Hey, how about Jeff Bezos announcing he's getting divorced? There goes half his money. Hopefully, he signed a prenup with his second wife there. So, all right, guys, I got to run. We have a 1 o'clock brief, accelerated retirement. We're going to talk about, we have a lot to talk about, but tomorrow I'm going to save a lot of ammo for what's going on this week for our free brief where we open up the doors to the public. Like I said, head to go.topgunoptions.com/brief. And actually, for signing up, we're going to give you a copy of our trade plan, 7-step trade plan. Do me a favor, read this and have it handy when you come tomorrow. That's $55 right there. And we'll also throw a copy of our OPCL, our options pocket checklist. When I went flying in the F-18, we had what we call a PCL, a pocket checklist, because the manuals for the F-18 were a couple phone books, right? We squeezed all the pertinent information down into what we called the PCL, and we did the same thing here at Top Gun Options. It's called the OPCL, the options pocket checklist. So what's that, it's like $90 in value just for signing up for coming tomorrow. If you can't see that that's a good trade, don't sign up because you're not going to be an options trader or a good options trader. All right. So have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see many of you at 1 o'clock for accelerated retirement. Cheers.